Welcome to What CEOs Talk About. Do you wonder what CEOs talk about behind closed doors? How they bring their vision to reality? How do they overcome and succeed through adversity? We share that and so much more with each episode. Now, let's get started with the show.
Hey folks, it's Martin Hunter here, the host of What CEOs Talk About, where we talk about translating strategy into frontline operations. Sorry, I'm about confused because we were just giggling in the pre-show here. So past guests include Mark Raffin from Negotiation Ninja, Jeff Livingston from Norvera Visuals, Steve Daniels from Slight Edge Group, Brian McKenzie from True Earth. You know what? Let's put a shout out to Dominic Rubino, our fishing buddy. He's with Profit Tool Belt and Cabinet Making Profit Systems. Damn, I said it right off the top. So that's pretty decent. Today, fishing buddy of mine, Marc Billard. He is the VP and General Manager of MetCredit. 28 years in the financial services. So he looks a lot younger. So I don't know
Thank you.
Who's older, who's younger, but that's for you guys to find out. Like I said, avid fisherman, and he is an old-fashioned crafter extraordinaire. So if you want to learn how to make a smoked old-fashioned, like top of the chart smoked old-fashioned, get a hold of Marc at the end of the show. Thank you very much, Marc, for being on the show. Appreciate you being here.
Thanks for having me and for the wonderful introduction. If there's two things that I hoped when I was a young man to have on my resume when I got older was being able to fish and make an old fashioned. So lifelong dreams accomplished.
The passing away, Marc, can happen. On your tombstone, that's what we're going to pay. Right. Avid fisherman and old fashioned extraordinaire. Marc, what do you want to put at the middle of this show? What is the center, the topic, the most important thing that you want the listeners and the people who are watching to leave with?
Yeah, I think that, looking at the service that I provide to my clients in the business I've been in for almost 3 decades now, just making sure that everybody who is running a business, whether you're the CEO or you're the controller or somewhere in between, that you have a really sound credit policy. It doesn't have to be detailed. It doesn't have to be elaborate. But if you're going to be doing business with customers and giving them some sort of terms, even if it's just 30 days, you have to start with an end in mind so that you reduce the risk of not getting paid by your clients.
Oh, good. So let's call the title Accounts Receivable, ... Start with the end in mind. Good. All right.
Sounds great.
So let's start 28 years ago. Let's hear your story, Marc. So when you did not have a beard, or did you have a beard 28 years ago? Maybe. I don't know.
Yeah, it was pretty scruffy.
All right. All yours.
Yeah. So I don't think anybody that I've ever met that's in our industry starts out saying, I'm going to be in the debt collection business. It just happened out of necessity. I had gone to school to train to become a professional helicopter pilot and successfely got my license. Mm-hmm. At the time, the economy in Canada was probably at its worst. Back in the late '80s when interest rates were in the high teens, mm-hmm. And so had a student loan to pay for my helicopter training, and jobs were not plentiful. So I was doing what I could, and so I had been working the oil patch, and just realized that wasn't something that I was going to do for the rest of my life. So I took some contract jobs, and then those ended, and I just answered an ad in the paper and really didn't know what I was applying for. So I went in for the interview, and it was really eye-opening. I had no idea that this industry existed and on the scale that it did. So, but what I saw was it was a business where you could rely on your communication skills, your interpersonal skill, and your emotional intelligence. Very similar to sales, and be successful at it. So I just took the job expecting it was going to be something that tied me over until I pursued got a job in my chosen career. And, mm-hmm. and 28 years later, still here.
For another 28 years to go. So,
Yeah, let's hope not.
so
Hopefully I can relax long before that.
So give us an oversight of what, when you say debt collection, let's talk about MetCredit. What's the, we're talking to CEOs, VCs here, right? Some people who are
Yep.
listening, they've got a list of action items, either as the CEO that they want to get done. And, getting paid is a critical component, right? So business is simple. Sell the stuff, make the stuff, get paid for the stuff, right? So the equation that we're going to talk about today is, okay, I've sold the stuff, I've made the stuff, I'm not getting paid for the stuff. So what does MetCredit do?
So MetCredit would act as essentially your accounts receivable department,
Okay.
and we're experts in the field. There's a lot of different things we can do, but we can handle from cradle to grave your accounts receivable from early stage, making sure that your customers, that the communication is there with your customers. If you're not getting paid, if your terms are net 30 days, on day 31, if you haven't been paid, or even day 30, you should be communicating with them, to find out why. Many times it's an issue of maybe the customer is not happy with the service that was provided and is prepared to pay, but not all of it. And until that conversation starts, your customer isn't going to pay you. And in many cases, they're not going to reach out to you right away and say, hey, this is a problem. They're going to continue to run their business daily, and when they get the call from you or the letter from you, then maybe they'll reach out. But I think our service, which we provide to large corporations across Canada, the banks and the telecommunication companies, and right down to small independent contractors. Getting paid is critical, and getting paid quickly is critical, and having us involved early on is really important, because even just the cost of capital, if your margins are thin, the longer you have to wait to get paid, you're paying a price for that. Obviously, if you're carrying it on a line of credit, or you've got other trade suppliers that you have to pay and they're charging you interest, you need to get paid quickly so that you can at least maintain your healthy margin and avoid complete loss.
Yeah. So in what we do, in what I do with my clients and the team, is we always look at moving companies from a reactive state to a proactive state. So I think the title really fits well here as well. So, okay, if you've got an AR problem, that might be a symptom, but it might not be the cause. So start with the end in mind. What do you mean by that?
Well, what is you're setting out when you I guess begin your relationship with a client is to have a long-lasting, profitable relationship, right? So how do you do that? And the first and most important thing is making sure that you're picking the right customers. A lot of times, people in the sales department, if you have one, or a businessman, they take whatever business they can get because you need to keep the revenue flowing. But as much as you might think you need that customer or that job, if there's a high risk of them not paying you, you're actually going to hurt your business by taking on that job. You may be busy, you may be working, but if you don't get paid in the end, then of course it can be very detrimental, especially for a small business. It can be the end of the business. So just make sure that you are asking the right questions, and doing whatever due diligence you need to do before you start down that road of working for that customer, so that you get a really, I guess, a strong sense that they are going to be paying you on time, that they do have the capacity to do so.
Capacity. Okay. So so you said ask the right question. So I'm assuming you say, like you would qualify any of your vendors, you want to qualify your clients as well.
Right.
So when sometimes it sounds too good to be true, it's often too good to be true.
Yeah.
So what kind of questions would you say would be qualifying questions that a CEO that's listening says, hey, is my team, my financial teams, when we're signing contracts, I guess I shouldn't really rely on my collections team. I should rely on my contracts team to be able to qualify and ask the right question. So what would be some of the questions that you ask your vendors or your clients so that you can get paid back? So I'm assuming that you've had issues where you've had to collect on your own clients. I mean,
Sadly, there are people out there that make the mistake of not paying the professionals for the service that they just provided, and so yes, we have had to, of course, try and collect from our own customers over the years. So it could start with something as sophisticated as having a formal credit application.
okay.
Yeah, and within that process, even you could include pulling a credit history on your customer, and there are companies out there that can help you do that. They provide that service, or if you're a big enough organization, you can open up an account with the different credit reporting agencies, and when you're going to bring on a new customer, have that credit application process. And gain the authority or the authorization to pull the credit bureau on your customer.
Oh, wow.
Yeah, and it could even go as far as having that customer sign a personal guarantee. If you're doing business, or if the customer is a corporation, and you're a little concerned, you want to do business, but you're a little concerned because maybe they're new, and starting out, they don't have a long-standing record. One way you can protect yourself is have the owners, the directors, sign a personal guarantee saying that if the company doesn't pay, that you have the legal authority to go after that individual and their assets.
So I all I can think of is this construction industry. That's all that comes to mind when I hear this. Right? These guys do deals on handshakes, and I believe in honor. I really do. There's too many people who take advantage of really good tradesmen out there.
Yeah, I agree.
And just go, ha ha ha, and they've got a massive kind of sales team, not sales team, but a legal team behind them to be able to deal with those, and you just crush them through legal fees, right?
Yeah.
So how detrimental is it to business? So if somebody is not ready and willing to sign this, because I mean, it could be cannibalizing your sale because you say, oh yeah, I want to do business with you, but hey, can you please sign this credit application? And the owner or the buyer will say, or no thanks.
Yeah.
So what should people think about? What's the pros, the cons? The
con obviously is doing a job for someone and not getting paid, right? And so not only are you out your profit, but you're also out whatever liquidated damages if you've got to supply, if you got to provide materials, or pay other sub trades if you're talking about a contractor, for example. So it could bankrupt a small contractor. One bad job could be the difference between eating for the year and not. And so I think that as much as, again, that you're a contractor and you're wanting to work, and maybe you're worried about not getting that next job, and you take this job or take a job, you look at it on the surface, and if you get that no feeling in your stomach, you shouldn't do it without doing some due diligence. And I would say that the person who refuses to at least provide you with some references, that you should be very concerned. Stay away. I think that the risk is too great. Now, I think you also have to temper that with what size is this customer in relation to your whole organization.
Agreed,
and your revenue, right? If they're small, you accept a certain risk. So if you look at the banks, for example, they have very sophisticated credit adjudication processes, and they know that there are low risk and high risk customers, and high risk customers are going to charge a little higher interest rate than the low risk customers. And they know that a percentage of those are going to default, and that just is all part of their business model. But if you're a small, let's say you're like, again, we'll use the example of an independent contractor, and maybe you do 4 jobs in a year. If one of those doesn't pay you, again, that could be catastrophic.
A quarter of your income.
It could be the difference between eating and not eating, or you all of a sudden now you're behind to your trade suppliers and to maybe running on a line of credit, and you're paying interest on that, and it's just putting you further in the hole.
Yeah.
So, and I think it starts with the sales team. I know you talked about, the where the contract is signed. And so if you have a sales team, and even if it's a team of one, really educating them, the salesperson, by nature, they just want to close the deal. They get excited by making that sale and bringing on that customer, and it's probably how they eat as well.
Correct.
So, but making them understand too that the objective is to get paid at the end of the job, not just to do the job, right? You don't want to be the busy fool. So, starting with them and making sure that they're taking notes and asking questions. If you're, again, use the example of a small contractor, if somebody calls you into their home to bid on a job, look around, right? Look at the environment. You see how people, what does their property look like? Do they look like they're responsible? Do they look like they take care of things? All those little things, I think, are signs of what type of customer you're going to be dealing with. They don't guarantee you're going to get paid, but information is power. And the more information you have, the more equipped you're going to be to make the right decision.
Correct. Listen to your spidey sense, right?
Absolutely.
When that little amber light in the corner of your eye starts blinking, then ask more questions, right?
Yeah.
And on the other hand, be careful of the smooth talkers, right? Because I'm sure that you've had a few people who said, come to you and it's like, oh, the deal was so good. And I never would have thunk. And it's just like, oh my goodness. So so you've got qualifiers, you got due diligence, right?
Yeah.
So, and then you've got risk management. So there's a whole bunch of lessons at the front end, right?
Yeah.
The balance between making the sale and mitigating risk is another component.
Right.
Like Mark mentioned, your sales team if they're out on commission basis, they want to close that deal. They don't want to be, inhibited by your risk mitigation strategies of not getting it back. So as a CEO, you kind of have to look at not just your accounts receivable, but also your sales team on who are they selling to.
Exactly.
Which I completely get. And then on the other side, when it's accounts payable, then be ready and willing to practice what you preach. So I'm assuming that if you do that due diligence process for others so that you pay them, that's it's good business hygiene, right? To have it both on the AP and the AR side, right?
Absolutely.
Good.
Absolutely.
So now I've done my due diligence. I've got it down. Before I see a problem, what can I do? What's your suggestion, your coaching, your mentorship for these folks? What signs and symptoms do I look for while we're doing business? Let's say there's reoccurring payments, right? Let's say that I'm getting paid on a regular basis. What are signs and symptoms that you go, like keep this, tighten the screws on this one?
Yeah. Yeah. Well, I mean, the most obvious is that payments start to show up later and later, or maybe they're not paying the full amount. You're getting something, but not everything. And it all comes down to communication, right? The moment you notice that, you've got to get on the phone or go over in person if you can, and talk to that person. Find out, is there a problem first? Because if there is, you want to sort that problem out.
In regards to services you've provided.
Exactly.
Okay.
Exactly. If the customer's not happy with the work or they feel it's incomplete, have that conversation so that you can deal with that while it's fresh in everybody's mind, and make sure that you're getting paid on time, but also make sure that when you're talking to them, you explain to them very clearly what the terms are and what the expectation is, and that they can't be late. You have to be the squeaky wheel. And if they're paying you slowly, there's a good chance they're paying others slowly. And your concern is you. Your concern is your business, right? So don't worry about the others. Just make sure. And if it looks like it's going to be a problem, then you may have to stop supplying the service or stop the contract or whatever it is that you're doing for them, to mitigate the loss. And depending on what kind of service you provide for them, are you essential to their business? If you're providing service to a business, you're more likely to get paid, right? So, for example,
tap off, squeak, squeak, squeak,
exactly.
Squeak.
Right? For a business like mine, if we don't have our telephones, we're nothing. So
You pay your
phone
phone bills
companies always,
online.
phone companies always going to get paid. Right? They're probably going to get paid first. But and that's any business, when especially if you've got a young growing business and you're trying to manage cash flow. And you've maybe got lots of money built out, but the cash flow is just not there for you to handle the growth. And so you're kind of juggling, who you're paying when. And again, that's where we come into play. If you are that young growing business and you don't have the sophistication yet, you don't have an AR department. AR is being handled by your business partner, your wife, or whoever it is, your husband.
Part-time virtual assistant.
Yeah, exactly. Then you need to have some professionals in your corner to make sure that you're getting paid. You want to focus on sales. You want to focus on what you're good at, what your core is, which is providing the service or product that you're selling. And let the professionals like us, let your accountant, let your collection agency, let your law firm handle the stuff that they're best at. So making sure that you're getting paid quickly is going to be critical for you to be able to, like I said, manage your cash flow and make sure that you're paying your suppliers and not getting into trouble.
So how much of your business is actually just regular accounts receivable department versus collection? Do you do that as well? Do you do the back end for a lot of people?
No, we don't do anything like that. We'll do what we call early out. So we'll have customers that'll send us their accounts at say 45 days. Their terms are 30, we get it at 45. But at that point in time, those are not, we're not managing the inflow of their regular payers. It's just the ones that become a problem.
Okay, gotcha. Okay. So when you were, let's talk about cash flow for a little bit. Like you were saying, there's priorities in regards to who they're getting paid or who they're paying. So you want to be at the top of the list. If you know you're at the bottom of the list, what kind of strategy can you offer some of these people to how do I create a pole position? I know that I'm at the bottom of the payers. I'm like, okay, you know what? I'm doomed. How do I win my way to the top, I guess?
Yeah. Well, it's challenging, but again, it's the squeaky wheel. Making sure you're communicating with that customer, and even if it comes down to it, if you've got somebody who can't pay you in full at the moment, get something. Every conversation you have with them, you should be trying to get some form of payment out of them. If they owe you $10,000, get half of it, get a quarter of it, and then make sure you put in place a plan. When's that next payment going to come in? Where is the money coming from? Like, get an idea of what their source of revenue is, or their cash is. They have some jobs that they're working on, and if they do, what's the payment schedule on those jobs, and at least make sure you're getting a piece of that. If you've got, say, for example, you're providing you're a trade supplier, you're a supplier of some sort. Sometimes a cash plus terms works well. So say they've got an overdue account, they're tight on cash, they still need to buy from you. You still want to sell to them to make your margin off what you're selling. Make them pay cash for their current purchases plus 10% that goes towards their paying down their debt.
Okay, gotcha.
Just doing something to, if you believe that the relationship is worth maintaining, those are things that you can do, and give that customer a chance to continue to keep their business going, earn their income, and pay you a little bit over time. Some other things you can do is have interest terms. And this is where it becomes important to have a contract that clearly states what the interest rate is that you're going to charge them if they're past due.
Okay, gotcha. That's a good lesson too. Yeah.
Sure. Yeah. Use that as leverage. Or the flip side is you can give them prompt payment discounts. If you pay your account on time, we discount your invoice by 2% or whatever it might be.
Okay. So in the 20 years of experience that you have, I'm assuming that people who don't pay are not necessarily all ill-willed.
No.
Right? So in your opinion, roughly in percentage rise, right? 25, 50, 75%, 80%. What is the split between shit ass, really I put all the bad words into one bucket, the people
Yeah.
who are actively seeking not to pay you versus the people who just go, shit, I didn't do the calculations right. I'm running out of money.
Yeah.
I want to pay everybody. I just don't have enough money. What's the percentage between shitty people and good people?
It's probably 98%, maybe even higher, that most of the people set out with the best of intentions.
Gotcha.
And life happens, right? Loss of income, health problems, divorce. You're running a business, and COVID happens, and all of a sudden your cash flow, your revenue, falls off a cliff. You talk about you bid on a job and you miscalculate. We're doing a reno right now, and we're talking to our contractor, and one of the things he talked about was the escalating price of materials and how quickly it's rising, and it has over the last couple of years, making it challenging for them to bid on a fixed price contract because they don't know. And so in many cases, they're having to really overprice the contract just to protect themselves against that rising cost in materials, so that they make some money. And so if you run a business, if you make a bad judgment call on what you're bidding, and you lose money on the job, somebody's not getting paid.
Trip to Mexico.
Right. Somebody's not getting paid, or somebody's not getting paid as quickly as you would like. And then it sets you behind. And that makes it really challenging, because then it damages your relationships with your suppliers as well.
It's a difference between a 4-day fishing trip on a boat for halibut versus just driving out to the river and casting the line in.
Right.
Okay, so 98% of the people are good.
Maybe higher.
Yeah. Okay, good. That instills confidence in humanity for me.
Yes.
So, having worked with Marc and his team, I fall in that 2%. Well, I don't personally fall in the 2%, but the client I was dealing with falls in that 2% mother. Blah, 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 blah. So with that said, how important is it? So I'm assuming people overextending their credit, companies. Let's talk about companies overextending their credits, right? So it is a syndrome within 2020 in the past few years that people don't know how to use credit or manage credit and have very poor cash management.
Yeah.
How does that reflect in business nowadays? Is that prevalent? Is it, I have you seen businesses going, oh man, you guys are shit at you doing your projections? Is that something that we should be cautious for?
Yeah, I think so. In many cases, when you're signing on a customer, it's tough to get that level of insight into what's going on in their business. And in most cases, if things aren't going well, they're not going to tell you.
That's true. Yeah.
And that's where asking for some references always helps.
Mm-hmm.
Whether it's you're hiring a contractor to do some work at your house, you want to speak to some people they've done work for, so you know that they're going to do good work. And the same thing when you're extending credit, you want to make sure that if it's a company or an individual that you're extending terms to, that you talk to some references and even get that credit application and that personal guarantee if you can, because people rarely, especially people you're just starting out a business relationship with, rarely are candid enough to tell you exactly what's going on. They're going to give you the picture that they want you to see, and that all is good and all is well, and we're the best in the world, and that's why you should do work for us.
Okay, let's turn the tables a little bit. What are your suggestions for payment terms in regards to? I know this is a big question, but what I mean by that is, so some people say pay the invoice as soon as it's due. Some people say wait until it's due, like the net 30, the net 45, the net 10.
Yeah.
What's your take on it? Either side. I'm not saying you have to pick one, but what's your take on that?
Yeah. Well, my personal feeling is you pay everything the moment it's due.
Okay.
And the reason I say that is, well, one, because you're supposed to, and my clients would probably get upset if I said something else, but as soon as you start pushing stuff out, it can become a vicious cycle. and very difficult to get caught up again. Right. So
Oh.
let's say you decide that you want to start paying everybody at, the terms are net 30, but we'll pay at 60 because, the people are just there. I can get away with it. But then you all of a sudden you hit a little bad spot in business, or you go through your slow season.
Mhm.
If you got seasonalities in your business, and then you all of a sudden you're falling further and further behind. And that can impact your credit rating. It definitely will impact your relationship with your customers. I know that most businesses are going to they're going to favor the people that are paying them on time.
Mhm.
So if you're, say, somebody who relies on a supplier to run your business, and there's a limited amount of whatever it is they supply, they're going to sell to the people that are paying them cash or paying them on time first.
Mhm.
We know that, and so. And the other thing is, it could cost you, right? It could cost you as far as your credit rating goes if
Mhm.
you're paying late, and it could cost you interest.
Mhm.
Again, many contracts have interest terms in them, and they're usually usually a fairly high interest rate,
Yeah, yeah.
2%, 3% a month. So 24, 36% interest. And that's some pretty high interest.
That comes into
Yeah,
about
you can
26%.
you can fall behind very, very quickly. If you're facing those kinds of interest charges.
Okay, so what you're saying is if the invoice is due on the 30th of the month, I'll
Hmm.
just pick 30th of the month. Your suggestion on the 30th or the 1st, you pay.
Yeah.
You don't wait the 10 days or the 30 days to pay it. You pay it as quickly as you can.
Yeah.
And then you use that timeline for a buffer in case of um situation where cash flow might be a little bit tighter, but you
Right.
always try to bring it back to as close as possible to the due date and
Yep.
not let the net 15, 30, or 45 go through.
Yeah.
Oh, thank you.
Exactly. So if you've got the money, pay it. If you're waiting on receivables, then that's a different story. But I think it's critical that you're always making sure that everybody's paid at least on time, or within the terms that they've extended to you.
And that puts you, I mean, the one thing that you've said numerous times is EQ in communication. So we'll move on to that because I think it's critical. So having this good relationship where you've got open communication with your clients in regards to accounts receivable is also important. I'm assuming. Well, I'm not assuming. You've said it numerous times. So being able, I'll let you talk to it. How important is it to communicate and expectations for you?
Yeah, it's critical. It's key. If you're not communicating and you're just hoping that, well, they're late paying, well, the check will show up tomorrow, and they keep going to the mailbox and the check doesn't show up.
Mhm.
And meanwhile, that customer is maybe having financial problems, and they're getting deeper and deeper and deeper into debt. And so it's very important for you to know early on, right, so that you can come up with a strategy. And if that strategy could involve having to take legal action, and you want to make sure that you are taking that step quickly, for a couple of reasons. One is there's a statute of limitations on taking legal action. And if that expires, then you lose that right. You lose that
Mhm.
ability to take legal action.
Mhm.
But again, the other is you want to make sure that you understand if there's a problem. You want to know right away. All right. So then maybe you can have that conversation and come to some other terms. And if you're still maybe providing a product or service to that person, that you can turn the tap off, so you can reduce your exposure to a potential complete loss.
To know right away, you have to have constant communication. So that's
Yeah.
another one. So that you're not waiting at the end of the 65 days when your team tells you, "Hey, boss, so here, give me a report on all the ARs that we've got. What's the age receivable? Where are we delinquent?" And you look and you've got 90 days plus. And you say, "Okay, well, where were we in this conversation with these customers, clients, consumers that took us to 90 days,
Yeah.
right? Why are we not talking to them prior to them giving us money so that we know that, Jimmy is going to be delinquent this month because he's having a hard time if we're not having these constant communication?" So tell me, what has made you in the 20 years that you've been doing this? What's the what are the like kind of three things that from the time you were on the phones to currently collecting and talking to big businesses to show your success? What are the things that you do like EQ or communication wise? What's made you successful in collecting so much money from people?
Yeah, I think you hit the nail on the head. It comes down to EQ. I mean, so there's a lot of pieces to our success, and one of them is having a really good operations team,
Hmm.
so that when we're dealing with, in many cases, clients who send us tens of thousands of accounts per month.
Whoa.
Yeah, so there's volume, and you have to have the processes in place.
Gotcha. Yeah.
Yeah, so operationally, but it really comes down to where the rubber meets the road. When you get that customer on the phone, we're talking to our clients' customers
Hmm.
on the phone, is having making sure that you have people that are well equipped with the right skill sets to be able to have a productive conversation with that customer. And I think there's probably a perception from a lot of people out there in the world that collectors are these rough, tumble, knuckle dragging
What's the
guys.
show called? Dog or I mean all
Yeah, Dog the
these.
Bounty Hunter. Yeah, we're not bounty hunters, and
You got a
and
beard, but it's yeah, you're not.
that's right. We're all nice people, and we know that the people we're calling on don't want to receive our calls.
Hmm.
Right? Nobody wants to be in a situation where they're behind on paying their bills. So we know that before we pick up the phone, and we respect that person's in a situation for a specific reason. Sometimes it's bad decision making. Sometimes it's life circumstances that cause them
Hmm.
to fall behind. Whatever it is, it really they're not there. They didn't set out that way. You asked that question
Hmm.
about what percentage of people set out to defraud
Hmm.
the people, their creditors, and
Hmm.
it's almost none. And most of those, the fraudsters, we never see
Hmm.
in collections. Our clients usually filter those out. So just being able to have that conversation, and this is again why it's kind of important to utilize the service of a collection agency is one, if you don't have the resources, you don't have the people to constantly follow up and make those calls, and have that discussion with your customer why they're not paying. There's also, for us, there isn't an emotional connection to that customer or
Oh,
that
that's a
money,
good one.
right?
Yeah.
So let's say you're a contractor and you've gone in and you do great work, you take pride in doing fantastic work, and then that customer doesn't pay you. It's easy to take that personally,
Yeah.
especially
Yeah.
when you're counting on that to pay your bills at home and put groceries on the table. And so for us, we don't have that emotional connection. So we can
Hmm.
remove that from the equation. It's all about the facts. What are the circumstances that are leading to have led to not getting paid?
Yeah.
And then what are the steps that need to be taken so that you can get paid? And then just keeping a really tight leash on that, constant follow-up, making sure that the expectations are clear. Okay, Mr. Customer, we've had this conversation. This is what we've agreed that you're going to do. Times and dates. If you're going to pay X on this date, and if promises to pay half on Friday we're calling them.
Hmm.
Okay, making sure that's getting paid, and it's not getting paid, we're finding out why. And then at some point in time, making a decision that if the promises continue to be empty, uh, maybe legal action needs to be taken. Whether it be small claims or Supreme Court, depending on the size of the debt. And also, credit reporting is something that we do, that we
Yeah.
use. To I guess um, motivate.
Yeah.
There's a consequence to not paying, and if people aren't going to pay you, then an option is to have your collection agency reported on their credit bureau.
Yeah.
And,
Gotcha.
and the value to that is that if um, they want to obtain credit
Hmm.
in the future, they're going to have to resolve that outstanding debt before they can.
Gotcha. So I was going to ask you about what's the skills. What I mean, I've listened, I've written down. So consistency is key,
Yeah,
right? So no emotional attachment
correct.
to being very objective on the steps. Like, why are we here?
Yeah,
Okay, I get it. and the move forward, which is absolutely great. I think the key thing out of all this is that you're humanizing the transaction. I always say it's important to humanize work, right?
Right.
Because it's easy as operators to look at numbers and go, we need to increase velocity, we need to increase performance, blah, 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 blah. Gross revenue is this and net profit is that. And you go, well, who's doing the work? There's actually Jim, it's Martin, it's Mark, it's Dom, it's those names. And when you humanize that, then you go, okay, great. What's the behavior that we want? We want people to be treated the way that we want to be treated without going, oh, religious and stuff like that. It's
Just respect,
exactly,
simple respect.
exactly. Yeah, with like the Spider-Man, with great responsibilities, or with great strengths come great responsibilities, whatever the Spider-Man thing is.
Right? Yeah.
So, kindness is key. Have you, or I'm assuming, what do you guys do when you know that at the other end, you've done this for 28 years, right? You jump on the phone and you go, I'm going to pick on a single parent, right? Single parent, COVID, lost their job. They got a couple of kids.
Yeah.
And you go, there is no way that I'm killing it.
Yeah.
Like they're down shit creek. They don't have a paddle and the boat's falling apart.
Yeah.
What do you do? Like, what do you do then? I know that's a loaded question, but there's like, what's your, have you ever been in a situation like that? Have you dealt with that? How have you dealt with it?
Constantly. Yeah. You know what? The reality is a large percentage of the people that we're calling on every day are in probably the worst financial position they've been in their life. We get a lot of repeat offenders that we see, they get in trouble and they pay and then they're good for a while and they come back. And sometimes that's just not understanding money management, not how to financially run their household. So, we get on the phone and people can only do what they can do. I can't change somebody's circumstance. I can give them some advice. I can point them in the right direction. We can try and work something out that is within their means. And that's all we can do. But really the recipe is the same all the way along. We get them on the phone. We tell them what the expectation is, that they owe some money to a creditor and it's past due. That needs to be paid immediately. And then if they're not in the position to pay it in full immediately, then we have a conversation and find out more about what is their situation. What's preventing you from paying this account today? And really it comes down to either they can't pay, they won't pay, or they don't want to pay, right?
Or they choose not to pay.
Yeah, right. So the can't it's very simple. Well, why can't you pay? What's preventing you? And we'll go over what their
financial situation
current financial situation is. Won't pay is usually a dispute. Well, I don't feel I owe that, or I don't feel I owe that much money. And then again, we have that conversation to try and deal with the objections. So, for example, we do a lot of collections for the telecommunication companies.
Oh, I feel that pain, brother. I've seen a $600 mobile bill. And I was like, what the fuck?
Yeah. Right. And so like, if I think back, and we've been dealing with the telcos as clients for more than two decades, actually right back to the beginning of the start of the company. But cell phone bills, when cell phones first started to become really prevalent, and not just cell phones, but smartphones and data usage. And most people were ignorant to how quickly that could rack up. And the thing, your phone was sometimes just constantly using data. And so we would see these cell phone bills that would come in for like $8,000 and $10,000. And, somebody went to Mexico with their family for Christmas and the kids were on the phone and they didn't realize it was, or they weren't even making calls, but it was constantly roaming and they got all these data charges. And so, a lot of times these were people with perfect credit, but they just like, why should I pay $1,000? What did I pay for? What am I paying for? And so in those situations, there's a dispute and we have to educate the customer on why they owe the money. And sometimes there's a compromise and sometimes there's not. So, just being able to speak intelligently about the service or product that was provided is also key for our staff. They have to be product specialists. So we have people that specialize in telco collections. We have people that specialize in credit card collections, and people that specialize in collecting off of or for contractors and small to medium enterprises, where they know they can sit there and look through the documentation. Like, for example, to add to what we were talking about earlier, how can you protect yourself is make sure your scope of work is detailed and spelled out. And if there's any changes, that they're documented, right? Because a lot of times that's where the disputes come into play is, well, why do I have to pay for this?
Yeah, absolutely. Yeah, for sure. Same thing as the phone. But I stand fast. I'm Scottish. Stand fast against telecommunication. No, I'm teasing. Yeah, because it was brought to legislation to advise consumers that they've extended, right? Because I'm assuming that came from massive situations like $8,000. I freaked out when I saw $600 2 years ago. So I can just imagine that. So to summarize this, a great conversation about start with the end in mind is, having key skills, being consistent right from the beginning of having one solid conversation at the expectation level. Here's a contract. Here's a scope of work. Here's my expectation. Number two, stay in touch with your client, consumers, customers to say, okay, where are we with this? How are you feeling? Can you still pay? The conversation should be, I'm selling the stuff, I'm making the stuff, I'm going to get paid for the stuff. So if either a service or a product.
Yeah.
We've got there are people attached to these businesses. So make sure that you're emotionally intelligent and that you stay objective. So that's kind of all of that. And then you apply that kindness principle to all of this. If you start like that, you go through your relationship with the customer or client. And at the end of the day, you should not have to do collection.
Shouldn't, yeah. You'll have less surprises. At least you'll know what's coming, and involve everybody in your organization. You go to a restaurant and you sit down to dinner and you get your meal. And what's the first thing they do after you take your first mouthful of food? They come to your table. How's the food? So make that part of your service that you have with your customers. Involve your salespeople. Right. They should be the first, if you have salespeople, they should be the first one that will be able to tell you if there's a problem. And so have them ask that question, after the product's delivered or the service starts. Hey, how are things going? Any problems? And that way, if there is a problem, you can correct it while you're still, while the relationship's still, in honeymoon phase. And let's face it, if somebody's juggling, their money, their cash flow, they're going to pay the people that they have that strongest relationship first.
Absolutely, right? Pay the people that are kind to you. Always want to work with your friends. Exactly, right? You don't have to be super duper buddies. You don't have to go fishing with each other. But you definitely, if I know that Mark treats me with dignity and respect, I know that since the beginning, if Martin's worked, Urgio's worked with MetCredit, and we've worked together and you're my client and we've always had good relationship, or I'm your client, then I know that I can go to you and say, Mark, hey, listen, I'm not going to be able to make the payment this month because here's what my situation, right? Yep. You'll know well in advance before that. And the ability to keep that relationship going past that mishap will get you a lot more business, not just from that individual, but from, hey, you know what? I worked with MetCredit. I had a hard time paying 1 month. And then, Mark said, yeah, whatever. I get it. I feel your pain. It's COVID. Sure. We'll give you a break for the next 60 days. But, we need to get back on track within 90.
Yeah.
Thank you. We're back on track here now, a year down the road, and you go, oh, wow, my relationship. And then you spread the gospel, right? So a lot of people don't see that building that relationship is key to not being, it's all about the difference between transactional and transformational. There's sometimes you guys are very transactional. You owe us money, boom. But ultimately you're being transformational 98% of the time. Hey, listen, we're here to provide you with advice. I don't want you to be into debt collection again. So hear my words, right? So that's what I'm getting from what you and your team does, right? So
Yeah,
Um,
it's gathering information and finding the solution that fits that situation.
and in the meantime, being respectful to the person.
100%. That's as an organization, that's key. It's part of our corporate code of ethics. Is the individual must be respected at all times, and it's critical. We're all people, and
Yeah.
and people get into trouble. They make mistakes. They make bad decisions. Stuff happens. Life happens, and it doesn't make them a bad person. It's just a problem that needs to be resolved. And our job is to be that intermediary between the credit grantor or the corporation and their customers. And their customer could be a corporation. Their customers could be a consumer.
Yeah. So with that said, um, with what Mark is saying, when it comes time to collection, if you're good at making a SaaS, so you've got this great software, you're good at providing a service, you're in the CPG world and you've got this great product, regardless if it's a product or a service that you're great at making it, you're getting great at selling it. When it comes time to collection, leave it to professionals, right? And there's so much more, but ultimately listen to Mark's advice of building that relationship and that contract straight up front. So, with that said, I got two more questions. First question, as I always, people say leaders or readers. I'm dyslexic. I don't read that much. Well, I do, but not to so if you're a CEO, you should read at least a book a week. No, leaders or learners. What are you looking to improve? What are you learning right now, Mark?
Oh, well, for the last year, and this doesn't relate to credit at all.
Nothing.
For our business is just we are going through an audit process, or just it's an operation, getting an operational certification, just making sure that everything that we need to do on a daily basis to operate within a certain structure and guidelines to provide that kind of I guess certainty to our clients that we are operating efficiently, because we supply financial institutions and large corporations, and of course they put a lot of trust in us. We're handling millions of dollars of their money every month, and so we have to make sure that from an IT security perspective, we're at the front of the game, and that all of our policies and procedures. While having a policy is great, but are you actually running your company according to that policy? And so that's been a big chunk of what I've been learning. It hasn't been by choice. I didn't seek it out. It's where our business is going. What else am I? I mean, every day there's always something new.
Oh, I didn't know that.
Yeah.
What's is there a piece of reference, a podcast, a book, an author, a speaker that you would say, hey, you have your podcast, right? That's right. So what's your podcast? Let's put that out there.
Yeah, our podcast is called Overdue Advice, and you can find that at MetCredit.com. And there's a lot of great content on there. I've been a guest a couple of times, but we have lots of people from lots of different walks of life with respect to the credit industry, not just collections, but also credit grantors. And we also have a blog, and that blog provides lots of great, valuable content to businesses, to people who are either running an accounts receivable department, or they're running their own business and wanting to make sure that they're getting paid on time, and making sure that they're mitigating the risk of not getting paid.
Gotcha. Okay. And where can people get a hold of you?
You can reach me at my email address, which is mbillard@metcredit.com. Or you can reach out to us through our website, LinkedIn. I'm on LinkedIn as well.
Okay, good.
Or just pick up the phone and call us. Our phone number's on our website.
Okay. Last question. Last question. When are we going fishing?
Soon. Very soon. It's snowing right now, so not this weekend.
Not this weekend.
but soon. I think Dom and I were talking on the weekend, on Friday, about just getting out for a day trip or a couple days, and then the big trip. Well, when's your birthday again?
I'm not saying for all the listeners out there, 29th of July is the big 5-0 for Martin. So I will be 50 years old. So
Yeah.
I'm dumping my wife. I got myself 2 younger ladies. Not just teasing, just teasing. Nothing's changing. New motorcycle and a kick-ass fishing trip with my buddies. That's what's on the menu. I'm healthy. My wife is healthy. My kids are healthy. So let's hope I get another 150 years.
Awesome.
With that being said, thank you very much, Marc. Marc Billard is the VP and General Manager at MetCredit, and he's given all his detailed information. So thank you very much, Marc, for being on the show.
My pleasure. I
am the host, Martin Hunter, of What CEOs Talk About, where we translate strategies into frontline operations. So thank you very much. And I always forget. What's like, subscribe, register, newsletter, all that good stuff. All right, folks. Thank you very much. We'll see you on the next show. Thank you.
Thanks for tuning in to What CEOs Talk About. Make sure to click subscribe to get notified about future episodes, or check us out at www.whatceostalkabout.com.